Natural gas again down on the day. That's excellent for my short nat gas positions. More on that in a second. Here's the S&P 500, more or less went nowhere today. Took a pause day after yesterday we finished 0.8% below, tying the all-time high. I think for two reasons it is absolutely possible that we could reach the all-time high. Looking at the data for tomorrow, the data so far as of right now looks bullish for tomorrow, but let's see what happens. There is, I believe, maybe some unemployment data or jobs data tomorrow morning at 8:30. That could have absolutely effect on the market. So let's see. But so far, the data for tomorrow is potentially bullish. And when I look at my short-term research, there is room to become more exuberant in the short term. A little bit of a bigger picture, here's what I think can happen, and I can absolutely be wrong. I can be wrong about all of this. I think we do, in the S&P 500, make a brand new all-time high. I don't think it's huge. I think we make a minor all-time high and then finally start to pull back, but let's see what happens. With the S&P 500 trading in a very tight range today, that is not good for day trading. Day trading, you want movement. We really didn't get movement today, at least as of 2:30 in the afternoon. Yes, I did try a day trade. No, it did not go well. My short natural gas position is going very well, though. As of 2:22 this afternoon, again lower, again making an unconfirmed breakdown, this time below $3.66 a cubic foot. If we can close meaningfully lower again tomorrow, that would confirm the breakdown. And I say technically, at that point, if we confirm the breakdown, nat gas could come down to $3.48 a cubic foot. If it can get that low, I most likely will start to unwind my short natural gas positions and be very happy about it. I still own half of my short crude oil positions. Remember, Monday and Tuesday I did say, hey, we could get a pause here, even a little bit of a tick up, and that's what we have, a little bit of a tick up on oil here as of about 2:18 in the afternoon. Let's see how we finish on the day. I do still have half of my short oil position because I think it is possible for oil to come down even further. I can be wrong. Let's see what happens, but we are still in that confirmed breakdown below $67.92 a barrel. We have already touched the bottom threshold of that breakdown, according to my research, and I can be wrong, at $64.42 a barrel. So personally, I want to see an unconfirmed breakdown below $64.42. Watch these levels. Let's see what happens tomorrow. As of about 2:15 this afternoon, gold was pretty much flat on the day after being down a little. That's fine. It again tested what I think that is important threshold level of gold at about $3,320 an ounce. It continues to hold that level. Maybe if it tests that level again tomorrow, I could actually add some to my gold position because I think gold generally either tracks sideways or goes a little bit higher from here. Watch these levels. The 10-year yield down again today. I say in a bear market and slowing economy that is bearish. Let's see what happens because most people don't think we're in a slowing economy or a bear market. But I know for a fact, as of 2:26 this afternoon, making what I would call an unconfirmed breakdown below 4.32%, almost said dollars. And let's see, if it confirms even lower tomorrow, sure, the 10-year yield could come down to 4.20%. I would say that would be even more bearish. Let's see what happens. Lower yields are not good for my short bond fund position. So personally, I want yields to come back up. Let's see how it works. Jerome Powell testified again today. Poor bastard. I wouldn't want his job for anything. But he said that the job market is strong. Now, U.S. consumers' perception of the labor market have deteriorated to the lowest levels in the last 4 years. Not good. The opposite of what Jerome Powell is saying. Excluding the pandemic spike, the COVID spike, the gap between those saying that jobs are plentiful and hard to get is at the lowest level since early 2017. Bearish. In the previous business cycles, this has generally been a leading indicator for unemployment. As unemployment generally rises, so does the risk of recession and sell-offs in the stock market. Again, this data, thank you, according to Augur Labs and as reposted by the Kavasi letter. More bearish news, but very few people seem to care. The Conference Board Consumer Confidence Index fell again in June to the second lowest reading since February of 2021. The Expectations Index, consumers' short-term outlook for income, business, and labor market conditions, fell to 69 points, substantially below the threshold of 80 points that typically signals a recession ahead. We could be in recession right now. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.